All right, and here is Friday, November 3rd, daily review. Was another perfect day for ATR trading. So once again, how I like to trade is 5-minute candles with 30-minute overlay candles. It allows me to see what's going on with one chart, but I also have my 30-minute candle with the 4-hour overlay. On the left side with the multi-day pivots, and you see there's extensions. We have extensions on in fibs now just because we're in an environment where it is needed. And yeah, you don't necessarily need it for the day unless you go past it, but let's take a look, and we can walk through this of what's going on. So we had FOMC on Wednesday. Thursday you had low range sort of consolidation, and then you had another gap up. So what's happening is if you see there's barely any red, especially on the 4-hour candles. It's just green, 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 green. So if you're trying to catch I don't say not catch a falling knife. If you're trying to catch a knife that someone's throwing upwards, you're gonna be in for a hurting. So you can make money both ways, but you have to really trust in the direction. And some people can't trade both directions because it's hard. I was the longest time. It was really hard for me to trade both directions. But once I started getting into ATR, it was just as easy as sticking to the rules and knowing your timing. But let's go into the review. So first off, so you have the morning and afternoon session we'll get into. I'll go ahead and draw my 12 o'clock line so then you can see. Another important thing to really remember if you're doing planning is now that we gapped up, were we gapping up? So we gapped up, we shot up above that 850 area. That was super resistance. So what was support for the longest time? Remember where we had some really big volatility and there was support right here. So let's go ahead, see how it was support. 1, 2, 3, they broke below, then turned into resistance. So let's see how that plays into today's trading. You can see here's the line. We did open below it, but within that first 15 minutes, they shot above it with a lot of volume. So and remember, it's plus or minus 20 point range. So the mere fact that they came back down. This is there to give you a reference of where we're at on the bigger picture, so you don't lose sight of it. But in the meantime, you still need to play the intraday pivots because they're really critical. So on a multi-day pivot, you can see that this was we've already blown through the +1 ATR. Then you have the next pivot, and then you have the next pivot. So this is a very rare situation where you've gone max, you've gone on a Friday, you've gone to that second pivot. I don't think I've ever seen it go past this on a downside or upside. So I wasn't convinced we were going to blow through and keep going. I mean, imagine the next true level would have been right here. And what's the second orange line? It's a +2 ATR. Never seen it, never in the trading I've done. I think if that was going to happen, there would have to have some kind of like major news, but it's again, these are weekly. So let's just go back to the basics of just playing your intraday pivots. So you open up below. So what do? As per rules, you can see that we were struggling to get above this line, this 75 area. If you can sort of notice this wick, this 5-minute wick. So we opened up, we came up. So I want to draw a line. Let's go, so that's a 70, say 75. So let's go and I'll show you what is the 75. I like to draw, at least on the Renko chart, a box. So I'm going to create a zone from 75 in this zone. So that's an area of interest. Anything below it, you want to be really looking for that downside, which absolutely this is how you would want to play this. As in, you come up, you probably want to short it. The fact that it came back down, I'd probably be shorting right here. the mere fact that it came back up right here, it should never have done that. And then look, you can even see that this was a lower high or higher low. You could have drawn this. The moment it broke back above, you could have got anywhere into here, and then you're playing what would be considered, your pivot range, which would be your bull pivot, and your target would be your multi-day pivot. So if you did that, if you got anywhere long in this area, because it came back above, and you held, within 45 minutes, you would have hit your target. That was 9 o'clock. And this right here was, wow, okay, that was 8:45. So you did that, these are 5-minute candles, that would have been 5, 10, 15, 20, within about 20 to 30 minutes, you would have hit your target. But look at this. It didn't get to the exact. Remember, there's a range, there's a 10 to 20 points. So you cannot be afraid to be adding to your position. It's really, really difficult to exact ticket. So if you would have got in right here and never came back up, and you held, by 9:30, another 30 minutes later, you would have had another 100 points. So this right here was 165, and this was down here was 65. So when in the morning session, that first hour, super volatile. So just get in. There's no reason to go in huge in size, and you have to trust. If this would have blown through, not just a little bit, but actually blown through, the probability is they would have came back to retest. And if it didn't, you miss out. Oh well, right? The name of the game is protecting your capital. One contract, 20 points, or 100 points, would have netted you $2,000 if you held for the entire move. Same thing if you would have done it from the morning session, or I say morning, the first 30 minutes. That's $4,000 right there. Don't get greedy. Once that happened, look, it was look below, and then new TPO 930. That was your low. What you could have got in right here. Support until proven otherwise. Just because it dropped down 100 points doesn't mean it can't go back up. Remember, we are in an uptrend. So these are just the big boys playing, right? Playing around. Then it established at 9:30. What's the rule? We made new highs. Have we made new lows? We did not. We did not make new highs, but the mere fact that at 9:30 we are above a pivot. So 9:30 we held. If we would have came and dropped back below here and closed at 9:30, then yes, I would say that there's a high probability that the rest of the morning they're going to fill this gap. But the mere fact that it held, you just hold and you just wait. This took a while, 30 minutes, then another 30 minutes, consolidation, and then right here, this was at 10:30. 10:30, we broke out of this consolidation. But yes, it didn't make new highs, but right here, morning period, I would have been targeting right here. So get in here. You see how there's this consolidation right here. This was the consolidation. You see how lower high, higher low. When this broke out, came back down, and it could not close. You see how it didn't close, and then it consolidated, and then it had nowhere to go, and they just squeezed it and just kept on going and going and going. So you could have got it. Ideally, you get in right here and you hold. It's either going to work or not. That's how you have to look at this. Doesn't matter how long it takes. It's something that's either going to have to work or it doesn't work. As in, you get in here, if it fails and breaks below, then you know that the next plausible thing is going to happen is it's going to have to come down here, so you switch. But if not, it could take you 3 hours for it to come all the way back up here. But you just have to hold, for however long it takes to hit your target. That's target trading and not emotion trading. And so you see how it was just a lot of up, down, but it never got back below here. Like, this could have easily faked you out, and you're like, oh, we broke this, so it's gonna go lower. Nope. Look, what do? Brought it up, and they brought it back down. Consolidated, and then right at 10:30 is when they completed the move into the rest of the morning. So right here, and then right here was the 12 o'clock. So let's get into the afternoon session. So you see how they broke. It was I actually went short here, and then I got stopped out. So then I actually then went long. But you see how slow this was moving. Then you had a double top. They came back down, and one would have thought, okay, new double top, afternoon session, 12:30. If this candle by 12:30 stayed below and this was and they closed underneath, then absolutely the odds are that they would have actually kept on going down. But the mere fact that they brought this back up at 12:30, you now have found your support for the afternoon, or the high likely that that's going to be support. If it ever broke down below, then it would have been violent. It would have been they would have brought it all the way down to probably right here. This would have been about 67 points. Actually, probably down to here. This was the breakout. Now, if the breakout then they lost this breakout, then they definitely would have took it all the way down to here. And then you just keep on, as they keep, triggering stops and making their way down, they could have made it down to here. So, and it's not unheard of. We've seen it where they've gone up, and then afternoon, they go from the mid range pivot all the way back down to the previous day close. So they definitely could have done that, but they didn't do that. So how do you know what the market's going to do? Well, you just have to pay attention to the timing. 12:30 is a key on setting range for the day. And then you see that they could not close those 30-minute candles below. And so even right here, you see how they shot it down, came here, but then within that 5-minute candle, they brought it back up. Hence, that's why this is the shooting star. That's a very bullish signal. So your next target would be right here. So afternoon, there was really not a lot of momentum. And then what did they do? They end up shooting it up, and then they broke it back down. And this right here was the last hour. This told me that the odds are that they lost the fight upwards, and then they were going to come back down. There's this candle right here. It closed below, and now it's resistance, and now the last hour you just have to hold. So that's why your morning session is going to be your better sessions 8-9 times out of 10, right? You're going to get the most volatility in the morning. Look at this. Volatility. Afternoon's a hit or miss on where it could go. So, again, that's how I would have played this. But the mere fact that they broke above here by the end of the morning session told me that this was going to probably play a key role in the afternoon. So, anyways, that is your Friday session. Just continue to do reviews on your own. Even if you didn't know the TA technical analysis, again, just remember where we at. And then, key thing you want to be looking for is this look below and fails. Like the fact that this came down, this should have held below here at that 9:30. If it did, then absolutely we have a high probability that would have kept on going lower. But the mere fact that we came back above, this right here said a lot. So, all right, well, I'm going to go into the weekly review week, and good luck next week, and good luck in trading.